Anthony. Morning to you, Fred. Okay, good morning to you. Today is the 31st of August, 2021. Today is a Super Tuesday once again. Now, today's Super Tuesday will be very interesting. I have came out with a topic I'll share more later, okay? But more importantly is that today is a very important day because our MAO, we're going to change our format from tomorrow onwards, okay? I'll explain this more later. But the caption of this morning is Billionaire John Paulson positioning with energy and gold bets. So apparently now John Paulson, the multi-billionaire hedge fund manager, is taking steps to increase his position in energy and gold bets. All right, he's seeing that there's further inflation coming down, but it's very interesting. It actually echoes what this Michael Burry says, but that is totally different from what the Federal Reserve actually is saying. So it's going to be very interesting. We'll talk about this later today during MAO and also in the Super Tuesday. All right. Now, I like this cartoon very much, and I think that this is going to be the way it will be. Because of this cartoon, right? I realize I purposely find this cartoon in a way to tell you that how the Wall Street actually really work. Okay, so take a read now, everybody. All right, how many of you understand this cartoon? If you can understand this cartoon, key the word understand or understood. All right, let me see how many of you can do that. There's about 18 of you right now. Let me see, right? How many of you can really understand what is this cartoon all about? Okay. How many of you understand this cartoon? Okay. I'll pay you $1 million a year to work at my hedge fund. I'll do the insider trading and you pretend that you create an algorithm that makes winning trades. And the guy replied, what if I actually create the algorithm? Sure, maybe you can eat fiber and make gold too. Oh gosh, this is a really right smack in the face, but this is actually exactly what's happening now in Wall Street. Right, how many of you understand this joke here yourself? If you understand, key the word understood, okay, so that I can see you guys, how many of you can understand this? This is very, very interesting Dilbert cartoon, all right? Anyone? Okay, I don't see that. Is there no updates here or because my thing is getting slower? Okay, never mind. All right, I assume that it's updating, but maybe my site is not updating as it is. Don't worry, let me just refresh my screen again, just in case. Oh, okay. All right. So, okay. So let's just continue this and we see how it goes. Okay. All right, disclaimer as usual, as every day. All right, disclaimer, we are here to just basically tell you what we view the market is. And end of the day, we are supposed to translate this information to you, okay? We just want you to make sure that you know what we are trying to share with you and you are able to actually exploit and make money out of it, okay? End of the day, you have, once you have seen the disclaimer, you accepted the above and you identified me, all right? Okay. Now, to be a really successful trader, okay, there's 5 books that will change your life. And I think these 5 books are pretty good. Rich Dad, Poor Dad, The Psychology of Money, Secrets of the Millionaire Mind, The Millionaire Next Door, and Think and Grow Rich. Now, I make the extra effort today to actually find you the 5 books, okay? How does it look like? Now, this is the 5 books, Rich Dad, Poor Dad by Robert Kiyosaki, The Psychology of Money by this Morgan Housel, okay? Secrets of the Millionaire Mind by Hart Iker. Okay, I pronounced it wrongly. I'm quite sure of that. Okay, and The Billionaire Next Door by Thomas and William, and Think and Grow Rich by Napoleon Hill. I think these are very good books you can consider to guide them either the e-portal or ebook, or you can buy the physical. I really like the physical book. Yeah, indeed. Okay, so we really want you to really be a successful trader, and you must have the right mindset to be one. Okay, so you can see that I take the extra effort to find all this for you in the morning. All right, let's study the charts for today. The bull goes moo, the bear goes grrr, and the lemmings go is different this time. Okay, let's go live right now to the charts, shall we? There we go. Okay, so now it's 9:08 a.m. and China A50 have just traded. This morning, China A50 had gapped down slightly lower, but it's kind of like near to the yesterday's closing price. So let's just do the same thing again. I know it's kind of repeated, but it's always very important to do this. First of all, let's put the MLP today. The MLP for today is here. Now, yesterday, if you put MLP, imagine that yesterday we have MLP, right? Remember? It's here. So when the market touches MLP and pull back below opening price, that's where the market came off. That's why the MLP is so important. And of course, if you look at today's market, this is the MLP for today. Okay, this MLP for today. The MA30 is still moving downwards because the market is going downwards. Now, it's very clear that the last 10 over days, the Shanghai China A50 has been coming down. And basically, you can see that it is really coming down steadily. All right, and all this tells me that the trading market itself is kind of weak. So I understand that a lot of people are still calling for buying in the China A50 counters, and I only tell you that different view, okay? Technical view is always different from fundamental value investment view, okay? Because long-term view, in value investment view, it could be a horizon of 1 year, 2 year, 5 years. Technical view is we try to buy near the bottom in terms of prices. So that's why we may have our differences at a certain period of time. But if let's say talk about long haul, okay, if the technical view is a buy and the value investment is a buy, then of course we get a perfect good buy. But of course, technical and fundamental will not be exactly at the right same place any time, okay? So that is China A50. Now for Hang Seng today, well, we can see yesterday the Hang Seng hit the MLP brilliantly and then rebounded. So that's why the MLP is so important. Now today's MLP will be somewhere near here. Okay, the MA30 surprisingly is about the same level. The MA200 has moved down a little bit. Okay, so later on we'll see how the market react and we see how can we see now. But overall, you can see from the China Hang Seng itself is also developing the same way like the China A50 is more towards the downside. Now it's very, very interesting to see this happening when you can see that the Dow Jones, the NASDAQ, the S&P 500 all trading higher. Okay, so you can see that there's a very big difference in terms of direction when we cross-check with the US market. Okay, all right, so that is what we can view now for the market. We are still about 4 minutes away from Hong Kong's opening, so we can go to the US market for now. Now for US market today, we can see that yesterday, the MLP was here and the market did not come down, so that's why the market stays afloat. But today we're a bit different. Today our MLP is somewhere here, and I cannot be sure. Yeah, wait a minute. I think we are having a doji today. Okay, it's a doji today. Let me just can someone calculate for me and see whether are we having a doji today? Right? Check the opening, the closing versus the entire week. If it's doji, can you let me know? Or anyone is free right now to do that for me? I'll thank you for that. And this is the MA30 today. MA30 today. Okay, Min Hui say it's a doji, yeah? Okay, confirm, as in you calculated, Min Hui. We need to calculate it to make sure that the body is no more than 20%. Oh, okay, wow, 13%. Okay, steady, Min Hui. Steady, good job. Thank you. Okay, by the way, I'm feeling much better. Yes, indeed, the coconut water that I drank seemingly makes me recover quite fast. Yeah, I'm back. See, my arm can raise up already. Yeah, still a bit of sore, but still much better than yesterday. Okay, so the MLP for today is 35,444. Wow, 444, good number. Okay, then the MA30 is 35,258. Okay, can you see that? Yeah. So we have the two numbers for today. So now today, let's just be objective. If the market cannot stay above 35,444, all right, the market today may go into some profit taking. But if the market do come down, the MA30, which is at 35,258, will be the strong support. So as long as the market hit 35,258 and doesn't go down further, I believe the market will rebound. I believe the market will rebound, okay? So that is a very clear statement here for the Dow Jones, okay? So watch out for this. I kind of suspect that the market range will be there. Now, if the market really goes up instead, then of course it has to break 35,444. And if it goes there, then it will challenge the new high because the BNB, as I said, the BNB 1 times 1 is at 35,000. 770. That is the 1x1 positive. So the positive 1x1 is 35,770. So that will break above the previous high of 35,616. Okay. All right. So that is the Dow Jones conventional view for this morning. We are now about 1 minute away. Let's look at the weekly chart. Weekly chart is still hovering exactly, pinpointing perfectly on my short-term trend line. So as long that the short-term trend line doesn't really, even close below, we are seeing next week the market recover. So it's like every week the market will recover. So the market is still very bullish lah. So there's no need to be really worried about that for time being. Okay. All right, we are now another 20 seconds, 40 seconds away. Now the NASDAQ, a quick one on NASDAQ. I show you why I draw the major trend line yesterday already. If you missed this segment, go to the yesterday's what do you call MAO? But of course, what we saw was incredible. The market went ballistic. It went all the way up, breaks all the levels. So I had to remove these guys away. It seems that the market is way too bullish for this. Now, yesterday, the MLP was here. The NASDAQ open straight away, continue to go higher. And that's the reason why you can see the market going higher down. Okay, all right. Hang Seng will open soon. I'm going to go back to Hang Seng first so that you guys can capture the Hang Seng momentum today. Okay, Hang Seng is going to open up right now. Okay, Hang Seng has just opened. It has gapped up. Yesterday's closing price was 25,484. This morning, gap up to 25,493. And now is fighting itself around the opening price level. Okay, so let's just be objective here. Okay, first of all, today's opening price is above pivot 1. Okay, I repeat, today's opening price is above pivot 1. So by right, above OP, CCRY will be a buy for the Hang Seng. Above OP, CCRY will be a buy for Hang Seng. This one, we must be very clear with this, okay? Very important information. Now, second information is that the KSI is red in color. So for those who are trained in the 1 minute trading on Hang Seng, do note the KSI is red in color. So which means that if there's any downside, it will flip down below OP first, okay? There's something that you have to take note of that. Okay, all right, very important information. Okay, now, so today above OP, CCRY for buy, 5 minute chart, look out for that. Now, if it trades below OP right now, like what you're seeing, then it will be under what we call as uncertainty zone. So traders will need to take note of that. Okay, traders need to take note of that. Okay, and of course, right now the 5 minute chart, I repeat, the 5 minute chart is right here right now. You can see that instead of going higher, it's taking some profit off the table. All right, the KTR -1 is 25,411. Okay, that is the KTR -1 level. The KTR +1 level today is at 25,575 level. Okay, so we have two technical levels to watch out for, 25,575, 25,411. Okay, so for those who are trained in Hong Kong, you will know what am I trying to imply. Then you know that what are the levels to watch out for. You just trade according to plan, okay? This is the main important part. Okay, just give me a minute. As usual, my phone calls coming in again. Okay, all right, done deal. Okay, let's continue. All right, so we wait for and see how China A50 develop. China 50 now is positive. China A50 is positive right now. So that is what's happening. Okay, something went wrong with my side here. All right. Corner. There's some technical error here. So okay, I'm back again. Okay, all right. So we have the Hong Kong movement. We will come back to that later. Okay, let's look at the NASDAQ, shall we? Sorry, the Dow Jones first. Okay, now today Dow Jones, we can see pretty clear. The Dow Jones opening price, it is marginally above pivot 2, marginally above pivot 2, 35,413. Now pivot 2 today is 35,408. So by right, when the market breaks below pivot 2, CCYR is a sell for today. All right, and of course, onto that, the KSI is red in color, so which means the market has the sell momentum. The KSI has a sell momentum. So with yesterday doji and today market opening price is very near pivot 2. I'm going to say a statement here. If the market stays below OP, excuse me, and below pivot 2, that's 35,408, then we might see some profit taking today. Okay, because the KSI is also red today. Okay, now of course, if the market is strong enough, as we can see the market, if the artificial hand comes in to push the market back up again, then once it stays above 35,413, which is above OP level, then you may want to consider that the market may go back up again, because even though the KSI is red, even though its opening price has touches pivot 2, but if the market hit pivot 2 and rebound and go above it, then it will become a classified buy. It's just that because the KTR is the KSI is red, then we need to look at KTR plus 1 to KTR plus 2 maximum to take profit. Okay. All right, that's for the long side of the matter. Okay. So traders, my personal opinion is that if the market breaks the low of yesterday, now yesterday's low is 35,370. So if the market breaks 35,370, for those who are PTP trained, you will know that this is called the higher low formation with the KSI red. So 35,370 has to hold up the upside. If the market loses 35,370, then we may actually really see some profit taking to KTR -1 to -2. Okay. All right. So traders, kindly take note of all this information. All right. Okay. Good. Okay. Okay. So just key for you. Dow, PJDD potential. Okay. All right. So I finished the Dow side. Okay, let's look back at the weekly chart, day chart, NASDAQ. Now, this is the NASDAQ I showed you earlier. Now, NASDAQ is still really flying up above the MLP and above MA, and they created a new all-time high again. So if you look at this, you can see that the market really, the BMV structure here is beautiful, really beautiful. Let's go through this. So this was the BMB initially, and then after that, the market came down first, hit the BMB -1 beautifully, and then rebounded off like a base level. And then when it goes up, I mentioned to you, if the market goes higher, it will easily go up to 1x1 positive, which already happened. So now after that, there is no more because it's like, both sides, the extension 1x1 is being done. So moving forward now is how high would this be going? Okay, there's no other way to explain this. Okay, so now with this MLP there and the high 15625, as long as NASDAQ stays above MLP, there's no reason for the NASDAQ to fall. 15,526 for today. No reason for the NASDAQ to fall. Okay? Okay, all right. Okay, let's go back to the charts. Okay, look at NASDAQ. Now, the NASDAQ, the opening price is between the pivot 1 and pivot 2. All right, KSI is green. So very simple. If the NASDAQ goes up, it will be heading towards the upside because there is no stopping it at the moment right now. Okay, so KTR +1, +2, +3 is all possible. Pivot 1 is the target 15751. Okay, if the market do come down, I don't think you have much downside, maybe KTR -1. Okay, so the downside is for KTR -1. too bullish at the moment. You can see that the market is very bullish. It's yesterday closed above the cage level. So it's really very bullish for the NASDAQ at the moment right now. And I'll explain to you why it's a NASDAQ bullish later on in the global news segment side. Okay, S&P 500. Now, same thing, S&P 500 went to new high. So I'll take this guy away. I'll redraw this tomorrow. But I'll just want to show you this right now. Okay, so we go. So we can see that we are very near to the potential 1-time-1 range. The 1-time-1 range is 45.63. Okay, I talked about this yesterday. The 1-time-1 range is 45.63 for the 1-time-1. Okay, now it's 45.31. Okay, but yesterday we created a new all-time high, 45.39. So very clear, yesterday the MLP was here and the day before was here and the market stays above. That's why the bullishness was there. Okay, very important information. So for today's MLP, it will be somewhere near here, 45.23 level. So 45.23 will be the main support level for today, 45.23. So as long as the market stays above 45.23, the market will still be kind of positive, okay? 45.23, all right, for the S&P 500. The MA30 will be here at 44.60. 44.60 is pretty far away, so there's no reason to panic, all right? So watch out for these two levels. All right, 45.63 and 45.23. Okay, these are the two levels to watch out for instead. Okay, done deal. All right, so that is what exactly happened. Let's look at the chart side. Okay, but today the S&P 500 opening price is 45.33. It is marginally away from pivot 2, 45.29. So same thing again, like what you saw for the Dow Jones. If the market opens and trade below 45.29, then there'll be some profit taking because it'll be below pivot 2. But the KSI is green. Now, it's different from the Dow. The Dow, the KSI is red. So if the KSI is green, then the downside will be really limited. So maybe you hit KTR -1 to the most -2 if it actually goes below pivot 2. And most likely, if the market can rebound above pivot 2, it will go back up again. So there's a difference between the Dow Jones analysis versus the S&P analysis. Totally different. You must understand the difference between them. Okay, if you cannot understand this, you replay what I just said, then you will know what am I looking at. Okay. All right, so that will be the S&P. Like I say again, very bullish. No way of coming down at this moment right now. So we just have to follow the charts. Okay. All right. Let's look back at Hang Seng for a quick moment. Hang Seng is still staying below the opening price for a little bit, hanging at the MLP. The China A50 is off the highs, but it's still positive. So two sides of different views. Okay, let's look at DAX, shall we? Now, DAX yesterday continued to stay above the MLP and above MA30, right? Yesterday, the MLP was here at 15817, and the MA30 was 15799. So yesterday, the market opens and it stays above MLP and above the MA30. So that's why the market goes up. Simple as that. Okay, so now for today, the MLP will be somewhere now here. 15,870. The MA30, 15,808. Okay, so as long as the market today for the DAX stays above 15,870, it is still pretty positive. Now there is a interesting trend line that you can see on the chart from this point here. So you can see that if the market breaks this so-called bullish wedge, okay, you know, you guys like to use the bullish wedge to be like a form of guidance, then of course the triangle. If the market breaks above the triangle, then of course the market should be able to go to the new all-time high level, right? If the market breaks this, it can go to all-time high. But of course, vice versa, it's the same way. If the market breaks down the MA30, this will be the main support first. The market have to be supported first, then it may go up again. But if the market really fail to stay as support, then come down, then there might be some profit taking. But I don't think that will happen, at least for now. Yeah, indeed. Okay, all right. All right, let's look at the Nikkei, shall we? Now, Nikkei is now fidgeting around the MA30. This is like the 1, 2, 3, 4, 5, 6. The 6 days already that the Nikkei is staying exactly on the MA30 line. Take a look, everybody. This is the Nikkei. Can you see that? 1, 2, 3, 4, 5, 6. The market just basically staying at the MA30 as if that MA30 is giving them the support. Now, so of course, we'll put the number back in again. So MA30 is 27,700 level. So as long as the market stays above 27,700, the Nikkei will go up. Vice versa, if the Nikkei stays below 27,700, then there was some profit taking. But you can see the range is only 200 point range, 200 points. So which means that if you buy above it, you can take profit at 200 points. If you come down 200 points, so it's like minus 200 and positive 200. Yeah. So this is something like this. Yeah, around there. Yeah. Okay. So that is very tight range Nikkei. Why is it not moving? Well, I'm also not too sure, but we can see that it's definitely consolidating. We've not seen this thing for some time already. So that means there's some bigger movement is coming on the way, perhaps. Okay, let's look at the Nikkei today. Okay, so today's the market. Oh, no wonder. You can see that the market is now doing a zebra formation. Potential is a yellow, red. Yeah, it's already a zebra formation already. And today it purposely tapped the pivot 2. It went down, but the KSI is green. So that's why it rebounded. So if you look at the Nikkei chart, you can see very clearly, yes, indeed, you see perfectly right. You guys know that if the KSI is green, even if the market breaks below P2, below OP, the first stop it will go will be KTR -1. And indeed, once it -1, you can see instantly it rebounded. So all these are really things that we have learned, we know, and it really apparently manifests. So you understand why am I so optimistic with our future? And you can see once if the market stays above the CCRY, right, you know the rule of the thumb is that it's a buy, right? So you can aim for at least KTR +1, which already happened again. So all these are really things that you know, and you can actually take advantage of this and make money from that. You just have to follow the rules, okay? Now, I already said for Nikkei trading, we are talking about trading it around 7 a.m. in the morning, all right? 7 a.m. Now, basically, let me explain this to you. Now, this is the 6 a.m. opening price. So 6 a.m., 6:15, 6:30, 6:45, 7. So by usually 7 a.m., there'll be already the movement. If you wait until like 7:15, 7:30, 7:45, 8 a.m. Now, 8 a.m., definitely the cash market open, there will be a lot of volatility. You can see that a big movement is there, okay? So the thing is this, if you want to start the day, you start the day at 7 a.m. That'll be the best time. All right, Ken? Okay, okay. All right, so I've covered all the indices. Let's look at the gold market for today. Let's go. Removing all the lines away so they can see this better. Okay, for gold itself, right, you can see that it's still coming downwards unless the market breaks this point. So it's still, but of course, on the flip side, if you look at it carefully from another view, the market broke the 50% mark, which is 1762. And by right, as long as it stays above the MA 200, above the MA 30, by right, it should be going towards here. So that's why I cannot deny this. A side of me is thinking that likely we should see 1836 soon. Now, why do I say that, right? Because I said that, first of all, I still believe that there's going to be inflation coming into the system, because even though that Jerome Powell said that no, but you can see that he may not be telling the truth, in my opinion. So that's the first thing first. Second of all, right, like I say, now you can see on the gold chart, it's actually staying above the 2 trend line, the 2 moving averages very nicely. And also, if today the gold can go above yesterday's high, most likely it will be going and challenge the 1836 level already. Yeah, that is my personal view on this gold. Okay, my personal view on gold. So that's why traders, you can consider to watch gold very closely these few days. Okay, you can consider. Yeah, hold on a minute. Okay, so this is the first view on the gold. Okay, first view on gold. Then let's look at the weekly chart. As I see, the trend line broke up and seemingly is able to hold water. And of course, remember this very big black candle? Remember that? I told you, right, this big candle, there is this very important MLP, which is 1820, remember? Now, basically, if you remember, during this period of time, whenever the gold hit 1820, gold keep on coming down, all right? And then after that, gold suddenly have a flash crash like this. But after the flash crash, you notice that this is apparently a very interesting neckline that is not, it's like seemingly done on purpose. So now it seems that the market has bought a lot, the big boys have bought a lot at cheap price around this area. So by right itself, right, they want it to be at least up by quite a fair bit. So to my opinion itself, right, if gold can stay above OP in general, I believe that gold price could be going up again. Okay, gold price could be going up again. Okay, so okay, so that is my view lah. So 1820 will be the very critical level to watch 1820. If the gold really go past 1820, it will push it up very fast towards the 1832 to 1837 range. Okay, so watch 1820 this week. All right, this is going to be a very important pivotal point for gold. Okay, I write it down for you. Gold important weekly MLP pivotal at 1820. Okay, all right. Okay, all right, clear? Cool, okay, Ken. All right, so we have the gold chart. Let's look at today's gold. Okay, now for today's gold, let's take a look. Today's opening price for gold. You can see that the opening price, it is between the, its opening price is below pivot 2, okay, below pivot 2. So by right, opening price below pivot 2, if it goes below OP, it will be a sell, right? By right, huh? But the problem is that if you look carefully at the bottom of the screen, the KSI is green, yes, and there's no blue bars, right? So which means that if the market goes above pivot 2, it will be a classic, it's not classic, sorry, it'll be a good pivot buy. CCRY, it'll be a buy. Okay, so if there is a buy right here, right now, it hits pivot 2 and it goes for a buy, right? It may actually goes higher because it's still a yellow bar. Okay, and do note again, the cage is right here and the market may be going up towards to test highs again, because that is how usually things work like this. Okay, so traders today, watch out for gold. Today gold could be a buy today, could be a good buy today. So let me put a 50-minute chart. You can see that right now. You see that the market very beautiful, purposely hang, this is opening price, then it hangs around here, created a BMB, then CCRY is a buy. Then you notice that the market just hover above P2, which tells you that the market is kind of bullish and now it's trading upwards. So that's why I believe that today gold will be a buy up day, and most likely it should be able to hit 1816 today easily. So I'm gonna put that 1816 is the KTR plus 1 level. So I suspect that gold should be able to hit this point rather easily today. Okay. Okay, guys, clear? All right, if everybody clear with gold and understand what I say, please key the word gold, G-O-L-D, all right, to see whether you guys are still hearing me. Okay, all right. Thank you, Fred, Kelzar, Anthony, Susan, Carl. All right, thank you. Okay, so that is the gold analysis. Silver is very interesting. Silver is very interesting. Silver has now stepped up above the MA30, and it is now also trying to test the 61.8 level. So if silver can cross $24 and let's say 20 cents, it will be marching upwards again. So there is a small possibility, small, why I say small, I'll explain this later, that silver could be going upwards to $25.83 in the near term. Now, why do I say that? Because I always like things when everybody talks about certain thing and it doesn't happen, right? The disappointment will come later and the market will sell. So now when silver, no one talks about it and it's going up on its own, right? I like it because that means the probability of silver going upward is there already. So now the silver has crossed the MA30 level, which is at about $23.98 approximately. So which means that as long as silver stays above $23.98, silver has the potential to climb. So now silver is at $24, right around there. My target is $25.83. Hence, therefore, it's a $1.83 upside potential. So how much in terms of percentage? So if you look, you take a calculator out itself, right? Okay, $1.80 divided by $24 is about approximately 7.5% return. Okay, 7.5% return. So maybe traders can really consider doing this. So silver, I hardly talk about silver, right? But today I'm telling you now, silver key pivotal is 23.98. Upside potential is 25.83. Okay, so I will repeat myself again and again and again and again and again. Is that the silver has to maintain its upside movement right now, momentum above $23.98. If silver can maintain above that figure, silver most likely will trade higher. Okay, silver will likely trade higher. Okay, clear? All right, so hopefully things can develop according to plan. Last one, crude oil. Now, crude oil, wow, look at the amazing of this. Yesterday, crude oil gap up and we put the MA30, right? The MA30 we put there is $67.58. $67.58, we put it there. Then the low of the day was $67.59. Oh my goodness, 1 cent different only. Oh my God. Let's take a look, guys. Look at the chart yourself, okay? Okay, look for yourself. Look at it. Look at it. We have used the MA30 perfectly. And look at it. My God, look at the way look at it. Look at the way it really happened. Look at the way the chart dropped down, kiss, and then go up again. Don't you already find that this is really incredible? So now you can see a very big difference here. If you use the conventional wisdom to trade, using the conventional break above MA to buy, you will likely be buying somewhere here because this is where the market breaks above the MA. But if you use the day chart, you would have been able to buy somewhere around here. So that's the reason why I do not use the moving average onto the shorter term. I only use it for longer term. And from the day chart, I just put a level for consideration. So which means that I can tell myself this yesterday, that if crude oil goes to the MA30 very nearby or touches the MA30 and then rebound, then it's a buy over there. You understand? You are buying it cheap. That's my point. All right. So hopefully you guys have spotted it. All right. So this is really amazing. Now today our MA30 level will be somewhere here, which is $67.66. 67.66. Now there's a problem here is that yesterday the market hit MA30 and also break above the MLP. That's why the crude oil recovered. Good. But today the MLP is not doing the same thing. Today's MLP is actually here. which is about $69.12. So which means that if the market cannot stay above 69.12, that means today there will be some profit taking. 69.12 is the MALP for today. If the market cannot stay above 69.12, there will be a pullback all the way down, and that will be $67.66. Got it? Yeah, interesting, huh? Okay, so that is the crude momentum or the crude forecast for today for crude. Okay, and if you look at it with our TWB chart, okay, for today's TWB chart, the opening price is also above pivot 2, but slightly above. And if it goes below pivot 2, CCYR is a sell, KSI is green. That means the downside will be about KTR -1 to -2 maximum. But more important thing is that if you below pivot 2, right, CCYR, it will be a sell. CCYR, it will be a sell. So that's why it seemingly goes in line with the MLP and the MA. So all this tells me that if crude oil is to go down, I will know where to look out for buying. If I want to sell crude oil today, then I just make sure that I sell below the OP and pivot 2 so that I know that the downside pressure is with me, okay? But because the KSI happened to be green in color, that means that the downside will be kind of limited to KTR -1 to the maximum KTR -2. So you can see, again, we can read off what we can do, what we can trade, and as long as you follow the game plan, you should be fine. All right, guys, that will be all for the technical analysis part. All clear on this? If everybody's happy with it, please key number 1 right now. All right, number 1. Thank you. Okay, thank you very much, guys. Appreciate it. Okay, guys, let's go to the news segment now. Okay, let's go. Today got a lot of good news to share with you, a lot of information. Stay tuned, all right? You really don't want to miss this, okay? All right, first of all, let's go. Okay, so from tomorrow, 1st of September 2021, we will have new changes to the TWB morning MAO, all right? Now, before, okay, all right. The thing is this, from tomorrow onwards, right, we will change. We will start at about 8:30 a.m. Now, the reason why I say start 8:30 a.m., but you must understand this, guys. I send my kids to school and fastest I reach there about 7:15. And sometimes depending on the time I reach there, whether it got rain or no rain, and also whatever it is, the next bus I can get is about 7:30 a.m. Okay. Now, of course, if I take Grab, it'll be better lah. I'll reach at 8 o'clock. But if I take bus, it's an hour journey. So by the time I reach office, about 8:30 a.m. And of course, if I rush out, unpack my stuff and get ready, it's about 8:45 around there. Okay. But of course, if I take Grab, then obviously I can be there by probably 8 o'clock. And then obviously by 8:30, I'm ready. So that's why the timing will be about 8:30 to 8:40 around there. Okay. So this one has to take note of that. Then we will conduct the global market news and what we can do right now. Now, the reason is because I still think that global market news is still relatively important to a trader, okay? And it's very important it set the tonality of the market. If you do the chart first and the global market view, you feel that it's just something just very wrong. You understand my point? So I'm not too sure how you feel it, guys. There's 54 of you. How many of you prefer to have charts first, then news? Then versus news, then chart. News, all right. If you prefer this, if you prefer the chart, then news, just put there chart, then followed by news. If you think that news is important, news, then chart, then you put there news, space, chart. Let me see how many of you, can you write it down while I continue talking again? Write your answer in. I want to see what's the rough idea. But of course, I just want to see this because at the end of the day, my view has already confirmed. We will do that. Then at 9 o'clock itself, all right, straight, I will not delay this. 9 o'clock, we will conduct our technical analysis portion, like what we do today. And we will complete everything by about 10 o'clock or earlier, because you realize that my technical analysis is about half an hour to 45 minutes, right? So which means that I can finish it before 10. So basically then everybody can have the MAO all way early before before that. So by that itself, right, you will not, be angry or upset. And I also can make sure that I deliver to you and everybody can do their daily life. Okay. All right. Now, of course, the thing is this, okay. The alternate market views, which is something that I'll share about it later, will not be covered anymore. All right. It will not be covered anymore. I know that some of you may not like it, but I do this arrangement, but I have to really follow what we think is best for you guys, because we don't want you to later on blame us for sharing things that is like, really not what mainstream media shares. And after that, it create unnecessary trouble for all of us. That's the reason why we actually decided to take this out. Okay, I'll explain more the details later on. Okay, so let me look at what your view is. I can see that some of you prefer charts than news. Okay, then majority you prefer chart than news, is it? Okay, so only a few like news and chart. All right, so very simple, guys. Very simple. Okay, what we do is we will start at 8:30, then by 9 o'clock sharp, I will turn on to chart side. So if you don't want a news side, right, you just have to you just skip the news, and at 9 a.m. you turn in for the chart side. So I tell you this exactly at 9 a.m. we definitely will flip back to the chart side. Okay, so all clear on this? All right, yeah. Okay, as I say, everybody different view, different style, but we can see that most people just don't like the news side. They want to go to the chart first immediately. Okay, so that's why we now give you timetable. Okay, all right, thank you so much. Okay, let's go with the news now. Now, interesting, wow, the pending home sales is minus 1.8%. Now, this is not good. I repeat, this is not good. The pending home sales was supposed to be positive 0.4% based on the forecast, but the market came out minus 1.8%. So that means that it's a second consecutive month, the pending home sales are going down. So again, that shows that the economy is not as vibrant as what Jerome Powell is saying. Someone is lying, but apparently this also tell you that maybe now the sales are down. Later on itself, it will go higher. Now, there's a problem here is that if let's say later on, if you think that it will be better, but if the inflation really creeps in, if only inflation creeps in, then it will create a bit of problem for the market, because then people will pay premium over it. And that's where I think that the home sales will drop even further. So that's the reason why. Now, today we have the consumer confidence. Okay, we are expecting 124. We are expecting 124 level today. So today is the measurement of consumer activity. All right, so today is a special day, Super Tuesday, right? I'm going to give you guys the chance to do a little bet here again. Now, plus minus 0.1, plus minus 0.1. Please predict what will happen today. What will be the data for today for this consumer confidence, okay? The forecast is 124. The last one was 129.1. Please key your answer right now. What do you think will happen today? Winner will take home 3.8 ADA coin. 3.8 ADA coin, right? Let's do it right now, everybody. What is the number? Now the winner plus minus 0.1. All right, if there's no winner, we will just snowball this, okay? All right, so everybody, please key your number right now. Okay, I give a countdown now to last 30 seconds. 30 seconds. 28 seconds. 26 seconds. 25 seconds. 20 seconds. 15 seconds. 10 seconds. You can go to decimal point, of course. 8, 7, 6, 5, 4, 3, 2, 1. Okay. All right. I'll just give you guys, I know there's a time delay between my speech and the Facebook thing. I'll just wait for a little bit more. All right, then I will stop it. Okay. All right. My personal number, I must write also my personal number. Now, my personal number, I think, is 117. Okay, my personal number. Okay, so Cal is 117. Okay, no more already, yeah? Okay, that's it. We stop there. Okay, why do I say that? Because we saw the pending home sales is coming down, inflation is going up, so I believe that consumer confidence will go down. That's my point. Okay, but I can be wrong. Okay, so let's see how it goes later today. But you can see from the chart views, well, it's been going up all the way. So the chart view is showing that every month since March itself, right, have been going up. So again, we could be totally wrong. We should follow the trend. It is like going higher. So let's see how it goes. Okay. All right, now this is the Dow Jones yesterday. The Dow Jones is very, very, very flat, less than 100-point move. Okay, from the high to low is about 100 points, but in between it's really less than that. So yesterday, the Dow Jones is down by 55 points. Okay, let's see what happened on the Dow Jones. Now the NASDAQ and S&P traded record high. Okay, to finish the August month very strongly. Okay, at least for now, unless something dramatically happened today. All right, so we saw the broad-based market up by 0.43% for the S&P 500, the NASDAQ up by 0.9%, the Dow dropped by 55%, 55 points, sorry, my bad. Okay, all right, now basically it was a technology counters that actually were moving up. We're talking about Microsoft, Netflix, Apple, all went up, all the NASDAQ went up. I'll explain to you why the NASDAQ goes up later on, okay? But you can see from here, with the record GDP and earning growth, rising inflation, and the risk of infection from the Delta variant speaking, the Federal feel more pressure to basically stay on, okay, the inflation. This is actually, well, Mike Wilson, he's actually more bear, so I will not talk about it. Basically, in short itself, right, what I'm trying to say is that the technology shares are now bought up because now with Federal Reserve says that there is no reason for the interest rate to be high so near term, right? So technology shares immediately saw the opportunity and they buy up. So more funds were used to borrow funds and then to buy up shares, and that's why you can see the tech shares all goes up yesterday. All right, but of course we do note this coming Friday, it's a US non-farm payroll with the ADP tomorrow. So market is expected to stay range bound. I repeat, the market is expected to stay range bound. All right. So let's look at what happened on yesterday. Dow Jones, pretty flat day. You can see that the entire day, the Dow Jones was really, really, really not moving. But of course, were there any lookout trade? There are. First of all, this is the one. This is a BMB, which happened to be the low of the day at that moment, followed by a CCRY. So it was a buy. So based on the rule of 1 times 1, you have already take some profit if you have done that. Then after that, ding dong, ding dong, ding dong, ding dong, ding dong, ding dong, ding dong for the entire day, which is ridiculous, but it happens. Then what happened? You have a new BMB with a CCYR this time. Breaks pivot 1, buy right. It's a sell, which we are short, nothing wrong. But the downside was kind of limited, and then the market rebound. And when it rebound itself, if the CCRY, that's where you look to buy. The upside is kind of limited, and then the price come back down again. So in short itself, right, the market yesterday was a doji. When you have a doji day, no matter how, you cannot really make money out of it. Really, seriously. So yesterday, if you lose money on Dow Jones, it's nothing wrong with that. If you actually even make money, well, you must be a damn good trader. All right. So that is what happened on Dow Jones yesterday. Now, gold yesterday came off. All right. Now, KSI was green, no blue bars. Everything looks good. But when the market wants to sell, we can't do anything. Let's look at the chart first. Now, because the opening price is between the two pivot, right? So by right, we should look out for some trigger. But when the market goes up initially, it was a CCRY with a BMB on the opening price. It went up. Now, if used by X rule, you will have taken some profit based on X. But if you want to aim for KTR plus 1, it didn't give to you. And if you remember, I said this before many times, if the KSI is green in color for the day chart, by right, when the market opens between the two pivot point or if it opens above pivot 1, it will usually go to KTR plus 1 easily, right? Remember I said that? But if the market can't go to KTR plus 1 when it should go to KTR plus 1, what did I say? Do you remember now? If I say that if the market should go to KTR plus 1 rather easily based on chart views and stuff like that, then it doesn't happen. What will likely be happening next? Do you remember? I said this a couple of times during our MAO. I did a couple of times during our Super Tuesday revision. Do you remember what I said? Can anyone text me and see whether did you learn something that I share over the time? Yes, indeed, the opposite will happen. Yes, the opposite will happen. So in this case, if the market is supposed to get to KTR plus 1, if it doesn't happen, then the opposite will happen. And of course, on hindsight right now, you can see the market really go down to KTR minus 1 after it failed to stay above OP. Can you see that? Yes, indeed. So that's the reason why, you know, if you want to have a rule, I mean, if you're going to explain this to you, you can see that that is what happened. So yesterday, in terms of rule, well, you can see there were these two trade, there were no BNB, so you couldn't have traded it. All right, so too bad yesterday gold didn't have a chance to really trade. It did came down, but still got no entry. Now, allow me to say this again live right today. Now, if you notice this, if your trade go for some time, gold has been downtrend for a while recently. So obviously, if there's going to be any KCX that's going to happen in a downtrend, majority of time, it will be below OP. This one is very sure. But if the market is uptrend, then of course the KCX majority of time will happen, but it will be above OP. So actually it's like that. When the market is uptrend, the KCX will still pop up, but majority of them may happen above OP because the market is uptrend. But if the market is downtrend, as I'm saying right now, then of course, most of the time, the KCX will be at below OP because KCX only develop when the market comes down. So if the market is downtrend and the market is coming down to have a KCX, likely we will see below OP. If the market is uptrend, okay, moving up every day, then the KCX majority of time will be above OP. Okay, so are we clear with this? There's no saying that which is which, but of course we did say before, if the market in general is not strong enough, right, you will notice on the KCX that you will not see much profit. So let's try this one. This one, the first profit was given. This one was also given. So 2 times the KCX gave profit. So what's a big deal? That means the market generally is still pretty okay, right, for the gold chart. So you look at the chart for gold, if you look at it, if you backtest this, you see, look at it. This is like moving upwards, right? And there's no blue bars at the bottom, right? So KSI is green, right? So that's why yesterday KCX was more of like able to make money because the general bullishness is there. So you must understand that there's a difference between uptrend, downtrend. There's a difference between bearish and bullish. That's very different. A market can be uptrend and currently bearish. The market can be downtrend and currently bullish. Very, very different. You must understand this. That's the reason why some people can see it. Some people may need to be reminded that you do not take the rule that I share and stick to the mud and think that it will always be like that. Okay, I hope that everybody clears and understand this view. Right, are you clear with this, everybody? If you're clear, please key the word clear, C-L-E-A-R, so that I know that you guys are clear and you won't ask me again about this KCX thingy. All right, we put it on record right now so that everybody is very, very clear. Okay, all right. Now, how do you know the market is bull or bearish, right? Very simple, look at the KCX. If the KCX can make money, means the market is generally still bullish. Yeah, that's the reason why today the market for gold is trading higher. Okay, for you to key. Anthony, Fred, Toming, Susan, thank you. All right, let's go. Now, US has ended their 20 years war in Afghanistan with the final evacuation flights out of Kabul. All right, so they have finished it. They have taken all their Americans out from it, but they left a lot of Afghanistan inside this their own country, and definitely there are people getting very, very worried. So you must understand the history. October 2001, that was weeks after the 9/11. US began its war in Afghanistan, and of course that was whereby that the Taliban at the time provided sanctuary to Al Qaeda. Okay, so now the thing is this: from then until now, for the last 20 years, 2,500 service members died in the conflict, and of course more than 100,000 Afghan troops, policemen, and civilians were also perished at the time. Okay, it was a terrible time. But now, again, the Taliban is back in power, and apparently, seemingly, US is allowing that to really happen. So now what is happening is US Joe Biden is saying that he's going to ask for withdrawal, and he has done it, and it's really, and he stands squarely behind his decision. Okay, so this is, the thing is that now we don't know what will happen next, but likely going to be chaos, all right? So you can see that this is where Joe Biden attend the dignified transfer of the remains of the fallen service member. And also, how much have it cost America? Nearly $2 trillion. Well, in this whole thing here. So $2 trillion went into Afghanistan. It should have made the country better, right? But apparently, it just created worse. So where the money goes, I think we are very clear where it went. Now, what is more important in Singapore, we have a lot of this COVID cluster now in different bus interchange because we know that some of the bus captains were hit with the virus. And of course, near to me is Tampines. Oh my God. Okay, now do note we have a very incredible upsurge recently between our locally transmitted. So what we'll do is this, we will not have any more gatherings in the office. We will not have any Super Tuesday gathering until the number goes down. All right, Susan, I think you're online right now, right? So unless the students want to come down, okay, you must be, you must take note that you have to be vaccinated, all right? 2 shots must be done. Then you can come down to the office because we also don't want that things happen, then we get into trouble for nothing. So FYI, we will not have any more Super Tuesday sharing session until the numbers drop. All right, apology on that, but this number is quite alarming and it's all locally transmitted cases. And you can see that the cluster link in the bus interchange, you can see that now it's spreading across different areas. And I cannot deny this. This is really not very nice, right? You can see that. So we have to be very, very careful. Now, of course, fortunately, now we have hit 80% population. Okay, we have hit in terms of vaccinated, full vaccination. So let's hope that this thing really stands for us and protect us. Now for overseas, Malaysia is getting very bad. Even their recent PM now is in quarantine after he contact with a COVID-19 patient. Oh my God. Okay, in Indonesia, they start to reopen schools, but they are very cautious to the wind. And then Australia, now the thing is this, the hospitalization has peaked already. So you can imagine that really, they try to, be different, but now they have to pay for the price. So that's the reason why I kind of thinking that we have to really take this very seriously. And New Zealand has the first case of Pfizer COVID-19 vaccine death. All right. So not too sure again what's happening, but doesn't look good. Okay. So guys, you just have to be careful. Now, SEC thanks after Robinhood thanks after SEC chairs tells Baron that banning payment for order flow is a possibility. Now, you must understand that Robinhood, how they make money. I told you before already, right? They basically collected all the data point and then they resell this data order flow to people. So basically, right, the big boys will get this order flow and they will know how to whack the retailers. And that's the reason why retailers are kind of, not thinking much, but they actually traded with this company because they offer 0 commission trading. Oh my God. Think about this. How can a company called a brokerage company charge 0 for commission? Think about this. How do they survive? And of course, they tell you it's okay. We do this because we want to give better order flow to people, order better execution. All I can say is this, So now SEC is coming down and telling them, hey, look, you know what? This is not going to work. Okay, so that's why now you can see that Robinhood shares came off recently. All right, and of course, if you look at it, but it's kind of difficult. You know why? Because you can see that many brokers are receiving this payment for order flows, and Robinhood is only 21 million for the June period. But example like TD Emirates is 31 million. All right, so E-Trade, Charles Schwab's, okay, TD Emirates Trades, all these tells you that, all these brokers are receiving hell of good money for all these order flow. So do you think that they will actually, let it go? No, I don't think so. Seriously, it's just going to be like thingy, then after that, just move on. That is the reason why recently the market is going in a very choppy manner because of all these algos are around and they take this data to create the market. That is what's happening. So for Robinhood shares, you can see after that, this Robinhood shares went up and all this Cathy Wood buying. Then ever since then, the share price hit $85 and then from $85 have dropped all the way down. So my personal view is this, okay? If you want to buy Robinhood shares, I will tell you that there is a very important technical level that you need to watch, and that will be here at $43. If it stays above 43, okay. But if not, right, I suspect it will drop down to $35. I repeat, I suspect that Robinhood shares will come down to $35. And only at $35, if you feel like buying it, then you can try to buy up from there, okay, at $35. Okay, okay, this is Robinhood. All right, so what are the reasons to stay bullish right now? Let's take a look. Oops, okay, hold on. Okay, this guy called Wedbush sees tech stocks rallying 7 to 10% into year end. Wow. Okay, let's see what he says. Okay, basically it's all right. This guy, I think it's entity, this Wall Street firm, called Wedbush, told clients that it's best to own technology sector in the final months of the year. They expect that the tech sector to rally by 7 to 10%, and Apple and DocuSign should be outperforming. And they believe that right, Fed speak and messaging came out of Jackson Hole is very bullish for tech stock. That's why you saw NASDAQ going higher. And it's all clear for risk on asset because there's no chance of interest rate hike, right? That's why it gives a strong direction for NASDAQ to go even higher. So that's the reason why. And because Jerome Powell said there's much ground to cover. So because of all this itself, right, it gives the very bullish view on the technology side. Now we know that the tech shares is up by almost 23% this year, but it's still going higher. And because of that, it's all right. These are the counters. You can take note. Now these are the counters and the price target. It's like Apple, the price target 185, DocuSign 290. Microsoft 350 and so forth. Right, this is coming from the company called Wedbush. Okay, all right, Wedbush. All right, so you can take a note. Okay, so they are kind of very positive with the market right now. Okay. Now the thing is this: you can see that the soft data is moving down, but the hard data is going up. So apparently the hard data seems to be climbing a bit. Right, it seems that the market seemingly is recovering. But the soft data now has slumped down, which means that, right, the recent movement, right, because make people feel that, hey, you need to be very careful. This consumer confidence is coming down. So that's the reason why now, right, this is where you can see from here, there's a technical point now at the hope level. There's a difference between the soft and hard. If you look at it, maybe the market is about to rally. Okay? Yes, because of that. The hard data is going up. The soft data is coming down. By definition, there should be a possibility that the soft data will go up again, and that means that the market may recover. So traders, you may want to take note of this. So for some people may see as a form of like, okay, that means that they have more worry, but some people see that there's more upside coming in. So traders, take note of that. All right, for the Vix indicator, you can see the Vix index now, although we have new all-time high, yes, indeed, the Vix has came down, but it's still not at the level that we bought back then at 15 to 16 flat. So traders, two views. One, for traders who believe that there could be shaking in the September period of time, then you may want to buy into the Vix. Okay, if you think that nope, there should be more selling, then let the Vix come down a bit more, then hit about 15 to flat 16 level, then you buy the Vix. But still, Vix looks good to buy in the near term. Just for protection due to volatility. Now, volatility can be upside. If the market is strong, both upside or volatile, the Vix will also move at the same time. Okay, now we're going to the alternate market views that everybody probably is waiting for. Let me just check the numbers now, what we have. There's 44 of you still online. Okay, so that means that 10 people have left. Okay, never mind. Okay, guys, before we go into this segment itself, right, on the alternate market views, okay, I want to show you a scary picture first. Okay, so I'm going to have a scary picture coming out. Okay, so if you are scared, okay, close your eyes. Okay, scary, really scary. Now, 20 years ago, this poster was around Singapore. Remember this poster? Everybody? How many of you remember this poster? If you remember, key REM. Remember this poster? Okay, now sorry I bring this up because I'm trying to share something in respective of this. Now we know that science has said that ghosts is non-existent. Ghosts, because we cannot see ghosts, so that's why ghosts is non-existent. But we also know that we can't see wind, right? And it exists. We can't see air. It still exists. So the argument is that, right, what you cannot see doesn't mean it doesn't exist. And if you look back into history for a trader, right? If you look back in 1987, 1997, 2001, 2003, 2008, and 2018-19, don't you realize that every time when the market basically, at the highest level, people will tell you that it's different this time. And then when the market collapses, then market will go into a crazy mode. Then after that, at a crazy mode, at the low end, when you say that let's buy, people say you're crazy again. And then after the market will recover. So now my view is this. I strongly believe that the next 2 years, we will see two big movements. We'll likely see a good sell-off in the financial market. And I believe that this will alternate many people's portfolio. And then after that itself, right, it will actually it will bottom out and there'll be more money put into the system and then the market will recover again. So I realized that I wanted to share my alternate market views with people to give them another view that is not really available in the market, in the mainstream media. Now, initially, some people like it. Then after that, it's all right. They felt that the sharing got a little bit too scary and basically make them lost the focus to look at the buy side. And end of the day, they miss the buy, they look at the sell, and then when the market goes higher, their mindset couldn't change. Now, I've been always saying this, guys, the market is overvalued, but the charts call for buy. So you need to follow the chart and still buy. If you want to short the market, then you just short it near the high and do a risk management. If the market goes down, you profit from it, go for fast profit. Because the market at this moment now is nowhere near a bear yet. You see my point, it's nowhere near a bear yet. So, but of course, after a while later, right, I realized that when it's good time, when we make money, everybody's happy. But when the bad time comes in, the whack is even heavier. So, and of course, a certain thing in TWB, we cannot really share with you outright because it's like it doesn't go with the technique. So, but then again, like recently when crude oil go down $61, I know that that's a very good time to buy. But because the technique haven't called for it yet, because the technique is calling for the safety of it to buy. But as a trader, you feel it, $61 is a very good buy level. And of course, this is what happened. So alternate market views is whereby I can relate things that is something that is going to be very different from what you see in the mainstream media. And my job is just share this with you with my own personal sharing. Now, I will be putting voice message, voice message to explain the charts and stuff so that you not only see the chart, or the typing, you also hear my voice. Okay, so I'll be doing all this via this TWB alternate market views. Okay, now it's going at 98 Sing dollars, not per month. Sorry, error, not per month. There's an error here, error, not per month. Okay, Susan, please take note that not per month. Okay, it's actually what per time. Okay, and this time is only for 3 months. So I have an error, typo error there. Okay, $90 one-time payment for 3 months, and we start in September to end at November. Okay, all right. So you can see now at the moment we have about 14 subscribers, totally empty now because I will start only tomorrow. Because today I want to give you the final big gift. Okay, all right, let's watch this. Everybody, today alternate market views will be kind of long. So if you are busy, then you may want to watch it later. But if not, stay tuned. Okay. Now, first of all, you can see that next one. Okay, the US inflation numbers are definitely going up. It's already at 30 years high. At 30 years high. Now, the Federal Reserve, they use a PCE data. And this one, they say already they want it to go above 2%. But now we see it's above 4% already. And they are still telling people that this is not really important. But if you look into history, at 4.2%, is back at 2008 and 9, whereby the market hit a peak, the Lehman Brothers time, and the market come off. Can you see that? Okay. Now, with Federal Reserve still not looking to do anything, because they always tell you they won't do anything until end of the year. So very clearly that inflation numbers will go higher. It's going to be very clear, because when you don't do anything, you're still pumping money into the system, right? The answer is very clear. The market will generally trade. The inflation number will generally go much, much, much higher. It'll be going higher than you can think of. And that's the reason why I'm telling you this, my friends, that, that this inflation will go through the roof. And when inflation go through the roof itself, right, gold will go up. Gold will generally goes up. Now you understand why am I wanting to do this alternate market views? Because I felt that, right, no matter what I say right now, people will not understand this, and I kind of like tired of repeating myself. So I rather just do this alternate market views within people who share the same view with me lah. Because history is something that is there for us to look at it. But if people at certain time they don't see it, right, I cannot help it, and I don't want to waste time to share with people who don't see it, because I know that after this wave is over, the selling wave come in ready, I will buy from the bottom to buy shares. I will be calling for buy of shares every time until next 6-7 years again. Got my point, everybody? If you got my point, right, please key the word got it. GOT space IT. I see whether how many of you all got it. By the way, got a lot more to share. Huh? Okay, all right, let me see whether you all got it. So you can see that right now, right, since 1929 to today itself, right, the same $20 is getting lesser and lesser grocery. We know that because we spend money at our local supermarket. We know that it's getting lesser. Last time with $50 can buy a lot of stuff. Now $200 is the same thing. So we are spending more money than that. We're spending more money than that itself. So that's the reason why we know that things are getting worse, and it will get even more than later. All right, now this is where, great, wow, so many of you got it, okay? So I hope that you guys can tell your friends, this alternate market views, I will not give it free. You have to be paid, because I'm going to pay for more important subscription from other places, so that I can get more important stuff, and it's for you. Now, we know that you've been asking me, Cal, Alibaba can buy or not? Well, I will say that no, Alibaba now still cannot buy. Okay, why? Why cannot buy? Let me explain this to you. Now, I know that many mainstream media now is covering China's tech stock can buy, as Cathy Wood called for buy also. Then there's some people say that Hong Kong now is cheap right now at the lower end. And there are people who do very powerful video that tell you that why it's a buy now on China market and stuff like that. So they are all doing this a very good job. How I wish that our marketing team is so powerful. Yeah, I know, but don't worry, our gap is going to cover the gap. All right. And of course, there's a lot of trending about which stock is a buy, That's why this is something that will happen later on with our crazy app. Yes, our crazy app will be doing something like this, whereby you can know which is the one that people are trending now in the market. This is going to be very powerful. That's why. Okay, but if you look at the reality of this is that, right, people who get really terrible hurt, like this guy, he has put in 99% of the saving into Alibaba counter option, and he needs Alibaba to go back to $243 to break even. Oh my God. And now his losses is about $300,000. And the time Alibaba share was trading at $172. So at $172, he is already down by $300,000 because he do options. Okay, so options can make a lot of money, can also kill you off. And right, and don't forget to sell, right, the daily gamma will kill you. All right. So now the last trade on this Alibaba is $162. So it's like another $10 down. So you can see that this is where. Now recently Alibaba share went up, right? I told you guys don't buy. I said that you can buy, that time was about 150. I say you can buy 150, but 170 you must get out. But currently some people read it the other way around. They tell me that KL say 170 can buy. Oh my God. Okay, then now the price come back down to 160 plus. Now, my view is this, I believe that Alibaba will go down further. It will break 150. Now, why do I say that? Very simple mathematics. NASDAQ now is at near all-time high, but Alibaba is at 162, way off from the 280 level. Can you see that? Okay, the guy who bought was somewhere here, he buys somewhere here, and after that, you can see it really kills him off already. Every day is killing him off. All right, so my point is this, is that if the NASDAQ is all-time high and Alibaba is at this price, if NASDAQ just go down by 5%, and if Alibaba got no near-term support, then it will crack down below 150 easily. All right, correct. Do you agree with me that Alibaba, if NASDAQ dropped down by 5%, Alibaba will lose to go below 150 easily? If you agree with me, please key the word agree. All right, then let me know, okay? Okay, now why would I say that? Okay, because now, right, if in the China mainstream media, you notice that there's a lot of people now getting worried, like this 支付宝 Alipay, right? They are very worried right now. They say, where's Jack Ma right now? Will Alipay they survive? How about Ant Financials? Okay, and all this, they're getting very worried. Okay, they're getting pretty worried. Okay, and the worst thing is this, if you notice this recently, this is a big problem in China. One of the China biggest film star, Zhao Wei, Lin Xingru, and the family being obviously of the tax evasion, all of them is being hit because now Chinese media, Chinese government is looking at because now you notice that a lot of this movie stars are being used to be the mouthpiece for financial stocks. And obviously, we know Zhao Wei got involved with one encounter with her husband and stuff like that. And recently, Zhao Wei, all her names everywhere was scrubbed off, everything, quite bad. And because she was kind of very, very related to Jack Ma back then, this is her husband, this is one of the very strong supporter. So now people are getting worried, okay, because now Zhao Wei, basically everything about her in China is being taken off. And the scary part is that now some people actually said this, that even her close friends, they are not even recognizing her. Meaning that if I'm a close friend with Zhao Wei, if you call me and say, do you know Zhao Wei, how is she? I will tell you that I don't know her, or I'll tell you that I don't know, and hang the phone. This is how scary things are happening now in this China. And why is that so? Because they want to whitewash the whole thing here. So that's why I believe that through all these things, it tells me that Alibaba most likely will be trading lower. And again, these are things that, you don't see mainstream media. You only see in people in such a article like this. So that's why it kind of difficult for me to say this in the alternate market views through that way. But of course, if you are having the Telegram, I will say these things like that. Then you were like, hey, it's some like entertainment thingy. Now, Morgan Stanley is recommending a barbell strategy to play the market. Why it happened? So basically, Morgan Stanley equity strategist Mike Wilson says that there's a pullback soon, but it's now at the point whereby to be careful. He believes that the strong economy is still continuing, but this will pay back problem with the demand and weakening consumer confidence, which has keep on reminding you that. And of course, he felt that, right, this is the guy, Mike Wilson. Okay, he says that bottom line is this, he's still looking at a 10% pullback in the market. So that is what he is saying right now, Mike Wilson. Okay, let me bring up what he says here. Hold on. Sorry, let me just redo this again. Okay, sorry. Let me just do this animation again properly. There we go. Creating a barbell portfolio means that the investor should add stocks in a potential winning area while minimizing exposure to sectors that are more risky. So Morgan Stanley is cautious on the high growth tech name. Very different, right? See, different people, different style. Wedbush was very bullish. Cathy Wood is very bullish. Michael Burry was bearish. And now this guy from Morgan Stanley is bearish. So you can see that, right? Same thing, but two different camps. So it's very understandable that traders also have two different camps. So all I can say is that this is what is available in the market, and I can share this with you. Now, this is the guy that I want to talk about, and his name is John Paulson, okay? This guy is John Paulson. Now, John Paulson, okay, this guy is well known for his attack onto the Lehman Brothers time. Yes, indeed. While everybody thought Michael Burry, actually the real guy that everybody have forgotten is John Paulson. He's the one that made $25 billion. Now, Michael Burry, he made about 700 million, and the market like going crazy gaga for him. But this guy made 25 billion. This guy should be the one. Okay, now FYI, who is John Paulson? He has made billions betting the subprime mortgages in 2008. And he believed that the inflation could trade much higher than expected. And that's the reason why now he's buying into gold. Now, we also know that back in 2008 and 9, he also been buying our gold. He predicted that the gold price will go to 4,500, which never happened. And he lost a lot of money on gold back then. Because gold after it plunged back down, right? So he also have his fair share of losses. I didn't be fair to everybody. But still, at the moment now, he's still a multi-billionaire. He believed that now the inflation number will creep up again, and he believed that this will happen. So again, if you look back into the chart earlier, I showed you the inflation numbers, right? It's the same number back then now in 2008 and 2009, and it's actually really happening. So he believed that gold will trade higher, and I tell you this, for John Paulson, I really give my respect to him. He knows what he says. And now you can see that he actually, in his stock holding, he bought quite a few medical counters, but he also bought a lot of gold counters, okay? So he bought a big position in gold like Nova Gold, Perpetual Resources, Anglo Gold, Ashanti, and Barrick Gold. Now, Barrick Gold was bought by Warren Buffett back then, but now he has sold off already, not too sure why. And he also bought into Occidental Petroleum, ExxonMobil, APAL, Royal Dutch Shell, and BP. I believe that. So that means that indeed, I told you before that if inflation will go up, right, crude oil will go up, gold will go up. And now there are two of them are showing signs. If you follow what I said in the MAO earlier, right, the technicals are showing that also. That's the reason why I strongly believe now that the market towards the next 3 months, we will see incredible inflation trades and counters will go a little bit scary. All right, so you can see that this is what he made during back then in 2007 and 8, whereby he shorted Freddie Mae and Freddie Mac, and then he shorted them all the way down to almost flat level. So he made hell of money, $4 billion for himself on just these two counters alone. That was really incredible, $4 billion profit. Okay, all right, now this is the next 3 charts. It's going to become the main thing that I will share during the Telegram. And I think that some of you may not like it, some may like it. So this is what the first one. Now, you know that this thing called HindenBurg Omen, right? Now, HindenBurg Omen, what is it all about? It's a technical indicator that is designed to signal the increased probability of a stock market crash. It compares a percentage of the new 52 weeks high and lows to a predetermined reference percentage. Now, I repeat, I'm not expecting a crash, but it's just that I happen to see this, and they did the mathematics, and it's clear that it does show that the new low ratio and the new high ratio is kind of different, okay? And the oscillator is also showing similar pattern. So that's why this type of thing is available and people can see it, but you don't see it in mainstream media. So of course, it doesn't mean that you must short the market. That's wrong. You should take it as a form of reference to remind yourself, if I don't go long today, I just go smaller long than go short, too big. You understand? So the thing is that when the market really come down, you also know that why it came down. So that's a reason why am I saying that you do not read too much into this, but it's good to know. So only people who like this information, you may take a look. Now, this is the Buffett Indicator. You can see that the last time in 1999, the Buffett Indicator hit 1.5 ratio. And then the last time it hit also 1.5 in 2018. That's why the market pulls back during a taper tantrum. But today, we are already at 2.07. We are now way higher than any time in history. So again, all this information tells you that traders, or those who are going long, can still long, but you need to be going slow at the moment right now, all right? And of course, this is the scary part that whether you believe it or not itself, you're entering September month, and apparently they superimposed the chart view of the 1987 and the 2001 chart. It looks like a bit like the same, but I don't think this will happen in my opinion. I don't think that the market will crash down like what happened in 1987. But I believe that this will happen in my perspective. Maybe it will pull back, then after that go higher. I don't think this will happen in my view. Now, of course, if for some crazy reason the market really starts to superimpose this, then again we will know where it's the bottom. So no matter how it is, right, I think that this is a good thing that we can share and people sending around. And again, this source is not from anywhere. It came from Bloomberg. Just people put it in and then put it side by side and then they send it out. So that's the reason why my job is just send you all these things. Your job is go and trade. Now, please do not get dissuaded by me and then go crazy bear, because I will call for buy or call for sell in this alternate market views. All right. It's just that the information is something that you don't find in the mainstream media. Hence, therefore, right, some of you may not really like it. Okay, got my point? Okay, so that is my point here itself. Or A50 approaching 455, is it? Well, let's take a look. Wow, really coming down. Huh? I told you, right? MLP is there. If the market cannot, if market fail to stay above MLP, boom, come down. You see that? So you can see that my bigger view usually is correct. All right, my short-term view, maybe I'm just a lousy trader. Okay, but nonetheless, my job is to share this with you. I hope that you guys like it. Okay, so same thing again. Today will be the last time we have this alternate market view on MAO. I hope that you guys, you know, if you like it, just subscribe to it. It's just $98 for 3 months. Very cheap. Okay. All right. Then we can talk about that. Okay. Over there itself. All right. Now, if let's say the group get bigger and there's a reason to have a discussion group, I will open that. If not, let's say really, but if not, it'll be a channel. It'll be one-to-one. It'll be like one-way traffic sharing. But I will definitely give you very juicy stuff like what you see today. Okay. That will be all for today. Thank you very much once again. Thank you for staying tuned. I really enjoy myself doing all these alternate market reviews, but we have to move on. All right. That'll be all for today. Have a great day. I'll see you later on Super Tuesday. Bye-bye.